Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday, it's the 28th of November, and the time now is actually 7 minutes past 9:40, so I beg your pardon. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to bring up the high-risk investment warning. In the meanwhile, can I just confirm you guys can hear me okay, and can you see the screen okay? Just let me know. Hey Katie, good morning. Hey Rob, okay, excellent. Very good. Okay, let's bring up the market commentaries disclaimer. And just our references. So we'll use MarketScope, we'll use TradingView, we're going to go through Bloomberg and Forex Factory. Let's bring up the, I'll bring up TradingView just to keep this on screen while I go through the Bloomberg. All right, so I can see I'm not looking directly at the camera here. I'm just using the other monitor to get through the email. Okay, so the first headline is China protests. China asset slump Monday as a sense of chaos and uncertainty gripped traders after growing protests against COVID curbs complicated the nation's path to reopening. The Hang Seng was down 4% early Monday before paring losses by about half. The onshore one weakened by as much as 1%. Goldman Sachs said China could end its COVID zero policy before April, earlier than widely expected. Okay, so that's the first. Incidentally, just with this China protests, if you take a look at the chart online, dollar did gap on open because of its safe haven nature. However, I'm not certain that it's going to hold the gap. I think it's going to actually close the gap. Let's just carry on with the next headline. Okay, the next headline reads as follows. The bond market is zeroing in on a US recession next year, with traders betting the longer-term trajectory for interest rates will be down, even as the Federal Reserve is still busy raising its policy rate. Okay, that's very important. Long-dated Treasury yields are already below the Fed's overnight benchmark range, currently ranging between 3.75 to 4%. And there's still an extra percentage point of central bank increases priced in for the coming months. So I just want to point back to the TradingView. We've got the real rate. I know it's quite a busy chart, but I put this 30-week moving average. That's this blue, I beg your pardon, this black moving average line here, and it's dropped below this blue ellipse. Okay, so the real rate now is trading below its 30-week moving average, and you can look at this in terms of a Stan Weinstein type of model: mark up, distribution, and looks like we've gone into mark down, and the US dollar following those footsteps. You can see we're at 87% on the correlation coefficient. Apple partner Foxconn is offering bonuses of as much as $1,800 to existing workers at its Zhengzhou facility, hoping to sustain the staff levels it needs to run the world's largest iPhone factory. The top-up will add as much as 13,001 per month in December and January for full-time workers who joined at the start of November or earlier. Last week, Foxconn offered similar bonuses for workers opting to leave. Oil's tumbled to its lowest level since December as unrest in China hurt investors' appetite for risk and the outlook for energy demand. Just because China is such a huge consumer of energy, and the protests has sparked a sell-off in the oil markets. West Texas sank below $75 a barrel after 3 weeks of losses. Okay, it does say the dollar rose on demand for havens after the protests. But again, we'll take a look at this in more detail in a moment. Coming up, European European stocks are on course to follow Asian shares lower. Okay, so again, I think that it's worth us just taking a look at that in a little bit more detail. I'm not certain that is the path of least resistance. Let's just bring up Forex Factory. All right, and well, you can see ECB President Lagarde speaks. And then we've got James Bullard speaking. It's due to testify before the Committee on Economic and Monetary Affairs, and that's going to be in the European Parliament. 4 p.m. ZA, 2 p.m. UK. Bullard is quite a strong hawk. Be interesting to see if he follows through with his hawkish sentiment here. Due to participate in an interview conducted by MarketWatch. MarketWatch is part of the Barron's group of companies. All right, just going through to this chart here. I just want to see if there's any comments I'm missing. All right, no, we're all good. All right, so what we have here is the US dollar. Looking at this in terms, this is a daily chart, by the way. What we've mentioned here is the markup phase. So the Weinstein markup, here's the Weinstein distribution, okay, and here's the Weinstein markdown. Similarly, this is now the real rate markup, okay, distribution. Here's markdown. Markdown is not quite as intense or severe as the greenback markdown. I think that's makes sense to me. We're still in a rate hiking cycle. It's just I think that we're starting to reach that turning point. So the momentum of the hiking is now declining. So we are increasing, but we're increasing at a decreasing rate. We more than likely get 50 basis points for December, as opposed to the prior 75 basis points, which I think was 4 in a row. So we still see the interest rates have an upward path, but the rate of change is declining. The dollar, I think, is feeling that much more intensely, because now there is a rotation of capital, because markets are forward looking. If the rate regime is changing, well, portfolio managers are going to evolve with that, and I think that's really what we're seeing here. I want to bring up the euro. All right, so I'm looking at this with interest. If the gap up, so we had the weekend protests in China. I think there's a certain risk of sentiment that we saw with the gap open on the US dollar. However, the rate regime here, I think, is more potent. We'll see when the market opens. It's going to open in 5 minutes, which way the risk sentiment is. Is it risk on, risk off? I would suggest that unless there is an escalation and there's crackdown, I think that the COVID-0 protests may take a sort of a secondary sort of role, as opposed to an interest rate type of an interest rate theme in the market. So we just want to watch it very carefully. If that is the case, and we'll have to watch this very carefully, because it's obviously a very sensitive variable when it comes to the risk on, risk off. What we have here is, so we're looking at the euro hourly, right? So we've got the impulse 1, 2. Here's the correction 2, 3. And now the question is, are we going to get the next impulse move up? maybe we get the next impulse move up. And the way that I think that we can measure that is with the crossovers of the moving average and the crossover of the stochastic. Now, it does already look as if the S1 level is holding as support. We don't have the crossover yet. We've got trigger 1 out of 2 triggers. If we get trigger 2, that in of itself doesn't guarantee any sort of success. However, if the stochastic makes its way through to the 80 and holds, then I would suggest that there probably is an underlying bullish momentum, and then we may get that impulse move. But we don't know if that is the case. You know, a stop loss would have to be in place, and of course your risk management would have to be in place if one was of the opinion that the sentiment was leaning towards risk on as opposed to risk off, which is a big if, right? Because of the protests out of China. Listening to Bloomberg this morning, it was really the major story. So there is certainly a lot of emphasis on the protests out of China. Let's take a look at the DAX. Okay. We'll have to go back to the euro. I just remembered we've only looked at it in the hour. We'll need to do a full top down, but let's do a full top down on the DAX. All right. So to me, this is not the easiest chart to analyze because whilst we certainly don't have a downtrend anymore, we don't have an uptrend, which is defined by a rising trough followed by a rising peak. So we need a higher trough, higher peak. Once we get those set in, then we've got the uptrend, and that's the definition. Okay, so let's just put in a reference trough here. Let's put in the reference peak here. Let's put in the higher trough here. Okay, and we'll have to put in a question mark because I don't know when this is coming, and we will need to put in an HP question mark as well. But that's basically what I'm looking for. So how would this play out just in terms of the risk off type of sentiment? Well, it may lead into this higher trough, and then perhaps we get into that higher peak. Why would we get this higher trough followed by a higher peak? I mean, the economics still seems quite dire. It's because we're looking forward, right? If we've got to a stage where the rates are now starting to roll over, okay, risk markets will react to that. So let's just keep an eye on that. There's no doubt that we are in a terrific impulse at the moment. There has been a gap down, so this will be clearer in the hourly chart, but where we closed on Friday compared to where we opened this morning on the futures, there's a gap. Okay, all right, let's just go down to the daily chart here. Yeah, Katie just asking for NASDAQ and oil as well. Yeah, we can for sure. All right, so DAX here, we're in zone 1. The last days, how many days have we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 10 days have been actually very lackluster, if I can describe it as such, in terms of the real bodies, just been very short real bodies. Thursday wasn't too bad. Monday was okay. Sorry, no, this was the previous Fridays. I beg yours. Here's Monday, Tuesday, Wednesday. Here's Thursday. Okay. So we'll see if we get some sort of real body today. Do we maintain in zone 1? Take a look at the stochastic. It's a really beautiful stochastic. It's just maintaining on that upper quintile in that plane of positive momentum. So as long as we stay above 80, that positive momentum certainly is a factor. A lot of people approach the stochastic looking at it in terms of overbought, oversold, and that's just like misapplication of the underlying equation. There's no overbought oversold in stochastic. Okay, it's either you are in an area of strong momentum upwards, or you're in an area of strong momentum downwards. That's really what the momentum indicator is all about. It's a terrific momentum indicator. Let's go down to the H1. All right, so here you can see the gap. Okay, so here's where we closed Friday. Here's where we opened. Okay, here's the gap. This is because of the protests in China. It's hit S2. S2 looks to be holding as a support level. Watch that support level very carefully. We have got a trigger 1 here. Okay, we've got a trigger 1. And we don't have a trigger 2 yet. Okay, so we just want to see if we get that trigger 2 now. Again, if we get the trigger 1, we get that trigger 2, then perhaps the protests aren't having quite as a big an effect on sentiment. If there is escalation there, that can change very rapidly. So there has to be caution around that. And of course, we would need to see the momentum build here. Okay, so if we get a nice cross on our EMAs over the next hour or two, and we start getting angle and separation, and we start getting the stochastic moving towards that 80, okay, then we, of course, probably getting a nice momentum build. Okay, but every trade needs to have a stop loss. Every trade needs to have risk management, no more than 2%, and 1% is probably a lot better. And it really depends on the size of your account, though. But the idea here is you want to be very much a master of risk management, more so than anything else. Let's just go back to the euro. I just want to do a top down. Okay, so okay, we're moving towards a cross here. All right, let's go weekly. All right, so weekly we actually are in uptrend on the euro. So we've got a series now of higher troughs, higher peaks. You can see that the momentum here has also shifted positive. So this, we're not looking at stochastic, we're looking at RSI. It just popped above 50. Okay, the RSI we tend to use for overbought, oversold. That's a much better indicator for overbought, oversold. But if you want to use it for momentum, then 50 is kind of the line in the sand, right? It's like think of it as a PMI, right? Over 50 expansion, below 50 contraction type. Let's go through to the daily. Okay, so we drew this in previously. So this was a nice swing. It's dropped down. This is very interesting here. So how shall we look at this? I think let's go through to this chart here. So just to kind of show you, we're on a daily. I'm going to come back to this. I'm moving to just a vanilla chart here daily. And the reason I'm doing that is because there is a pattern that seems to be, I don't know what type of pattern this is, but we've got a lower peak here on the daily. And I just wonder if this is perhaps some sort of pennant. Okay, maybe something like that. In other words, we could be set for some sort of continuation, a pennant, a continuation pattern. This is a very convoluted pattern that I've drawn here. This is not a valid pattern. At the moment, you can see this. Okay, I've only got one point for the base for the bottom trend line. I don't know where to put it. So this is let's just keep an eye on it. Let's just go back to the daily, just to make it perhaps a little clearer for us. It is still in zone 1, okay, and we do have that momentum to the upside, which suggests to me continuation pattern, right? So we just want to keep an eye on that, and then we've already looked at the hourly, so we're getting a nice crossover here. Okay, of course, does that mean anything? No, it doesn't. Okay, it could cross over and then it could whipsaw. It really needs to get the momentum behind it, Really needs to get the momentum behind it. All right, let's just take a look at NASDAQ and oil as well. Let's take a look at oil first, KD. Which one? Let's take a look at US oil. Okay, so oil is a terribly difficult chart. We're looking at the weekly, and it looked as if we were getting a higher trough, and it looked as if we were perhaps in for a higher peak. I put a question mark there. This was the last time I actually looked at it, and the situation's changed completely. Let's actually relabel, because as opposed to an uptrend, we've actually got a downtrend here. We can put the trough there, so we could peak, trough. We don't even need question marks here. We've got lower peak, okay, and here's lower trough. So oil's in that downtrend. Okay. Oil's in that downtrend, and if you just take a look at the RSI, it's below 50. Go through to the daily. Daily, it's in zone 3. Take a look at the Bollinger starting to pull away. Okay, so there's actually a momentum, a volatility breakout as well, volatility explosion, so to speak. Look at the momentum to the downside. Okay. It's quite difficult to get in now. The move has started on Friday. Nevertheless, okay, let's just see if S2 holds or folds, so to speak. And you can see the short-term momentum to the downside as well. What moving averages are we using? We use a 5 and a 10. Okay? Again, I want to stress that they're not any. There's no magic behind these 5 and a 10. I actually stole these off of an article from Baby Pips. It seemed to. I like the 5 and the 10, but Reggie, of course, use the ones that you are comfortable with. There's no magic numbers with moving averages. The lower the number, the quicker the signal, but the greater the likelihood of false signals. The higher the number, the more accurate the signal, but also the greater the lag. Okay. Let's just take a look at NASDAQ here. Can we maybe look at oil correlation with indexes? Yeah, absolutely. Let's finish off with NASDAQ here, Chris, and we'll take a look at the correlation coefficient, see if we can see anything there. All right, let's just go through to NASDAQ weekly. So we've got higher trough followed by higher peak. The momentum is a bit is lagging here. Okay, so this will respond if the real rate responds. Okay, so the momentum is definitely lagging here. You can see we've had a really good higher trough, higher peak, but then the last 2 weeks there's been just spinning tops, right? A little bit of uncertainty there. To the point, KD, we've dropped back into zone 2. Zone 2 is neutral, but a movement from zone 1 into zone 2 is not first prize, right? We want to get back into zone 1 for the signal that risk sentiment is risk on, right? So we're in neutral here. Let's just take a look here. We've got quite a deep. There's a 62% pullback. Again, it's on that S2 as well, and there's it's a nice level. It's a nice level. Support, resistance, resistance, and it's kind of come back to that level. So we've got sort of a triple confluence of support here. Ideally, we want across. We want the stochastic to move to 80, and of course, we want this to move back into zone 1. Okay, So there's a little bit of a warning sign that's being flashed here at the moment. It really now depends on, do we get the signals here, KD? All right, let's just take a look at the, so Chris just asking if we can take a look at oil and a correlation with the index. All right, so I think, I'm just thinking, Chris, well, let's start off with US oil. So we'll take a look at WTI. Okay. Before we even look at the indices, I wonder, can we glean anything from the real rate? Not sure we can. So remember, oil's inflationary, right? So from September, even if we go back to July 2021, there's sort of the inflationary pressures building. Okay, so that's interesting. And you can see now that there's sort of, I'm not going to say deflationary, let's call it disinflation pressures building. And I think disinflation is more accurate than deflation. In other words, we've got inflation, but it seems to be, we've got that median inflation rolling over. It seems to be sort of moving in the right direction. So that's interesting here. Let's just bring up NASDAQ. By the way, one would expect that if there is a if there is some sort of relationship between oil and interest rates, then there should be one with NASDAQ as well, right? Because NASDAQ is very sensitive to interest rates. Let's just bring it up. It's just interesting that the last movement here was a negative relationship. This is interesting for me with oil and interest rates. But I think that we would see interest rate, I think that would move towards a positive relationship as interest rates continue to moderate. Let's bring up NASDAQ here. All right, let me ponder this for a moment. So it's easier to see. So we've got the same issue here that we've got with the real rates. So let me explain to you what I think I'm seeing here. So here is the inflationary environment. So in other words, oil moves up, NASDAQ moves down. NASDAQ's moving down because interest rates are moving up. Why is interest rates moving up? Because of inflation. Very interesting, because I'm not sure that oil can be controlled by interest rates, but we know that there was supply side and there was demand side inflation at the same time. So that was effectively what was happening here. And what I said just before I turned over to the screen, I said it's very interesting that there was a negative relationship between interest rates and oil. Well, it's very interesting that there's a positive relationship between the NASDAQ and oil. I would expect there to be a negative. So I think this probably bears watching. I think that what is effectively happening here, and this is going to be subject to correction, Chris, is that I think that there's a lag in the monetary policy at the moment. And if there's a lag in the monetary policy, I think there's a lag on the response to that. In other words, although the markets are forward looking, I think there's a little bit of second guessing which way Fed's going to go. My sort of feel is that there is going to be, as long as the median inflation continues to roll over, I think then we're going to see the NASDAQ move back to a negative relationship with oil. I think that makes sense to me. We'll just have to watch to see if that's the way it does happen. I'm going to just slap on that phrase, subject to correction, because it's very speculative at the moment. Does that help, Chris? Let me know. I think if there's any other questions, can you guys pop those in? We will have a live trade this Friday. I haven't set up the GoToWebinar room yet, I'll do that during the course of the day. Alrighty, let's wrap up here, guys. Thank you very much for joining. You have my email address if you want to get hold of me. Thanks very much, guys.